Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of January 20th, 2025. Let's get started. SEAF signals for this week. We have financials, energy, and industrials. This was a complete flip of what we had from last week. Sold out of consumer discretionary, communication services, and technology. The other thing, to kind of look at is healthcare. We were kind of starting to track healthcare. It was never actually a SEAF signal, but it did make it up into the top four and was looking relatively interesting in terms of its setup. This is one of the things that we do to try to not, we try to listen to the model is what I'm saying. And we're seeing a little bit of a reversal here in healthcare. Obviously had that nice strong tactical month with a couple of strong weeks, but never quite got up there. We're going to take a look at that in a minute with our rainbow charts. But overall, financials looking really strong. Energy also having a nice real strength here, and industrials being relatively strong across the board. Going into our heat map, just wanted to highlight here, like as I said, financials looking really strong. We actually had a 0.55% increase on the trading week, which if you've watched my videos, that's statistically significant regarding the inflow. And with energy at 0.44 on the week, also showing some strength. We do have a little bit of clumping in this green area, not as much as we sometimes see where we're kicking on all cylinders, but really seeing some strength in these top two with energy and XLF, and then industrials holding its own as well. We had a big week last week in terms of flows, up 3.9% overall. That is the total assets under management for all 11 sector spiders. And then for the last 3 days, we've actually been back over that 300 billion mark that we kind of talked about a little bit last week. So showing some positive momentum in terms of inflows. I believe our largest day last week was Wednesday at 1.8% increase in overall flows. So money flowing back into the market. People seem to like what's going on. We are currently up today as well. Heading into our rainbow charts, this is what I wanted to highlight, and we see this every so often, and this is why the model is kind of built the way it is, and we always tell our clients to be careful with leadoffs, but potential setups, but those setups aren't going to work every single time. So what do we have here? We sat in that bottom dwelling area for quite a bit of time. Really strong decline in relative outperformance for the last quarter to 2 quarters of last year. Started to kind of break up into this neutral and come up, touch into favor ever so slightly, and then we're right back down. We did see outflows. Healthcare was 10 on the trading week, so pretty strong reversal, 0.31% outflow. This pattern failed, and this happens, right? So we're gonna look for that approach, and who knows, healthcare could go sideways for a little bit more before it makes its next leg higher. But as of right now, we saw this little downturn in the relative outperformance. Still, a little bit broader uptrend here, but we do need some more consistent flows over the course of time to really hammer this thing home. And we just didn't get there in healthcare. And healthcare is actually toward the bottom of the ranking overall for our SEAF model. Looking at industrials looking strong. We had real kind of quick inflows here on industrials, shooting up right into that upper favored, seeing some nice relative outperformance with that move from avoid to neutral to favored over the last week or two. Industrials looking relatively strong. Still has some upward way to go in terms of upward resistance in the relative outperformance part of the chart, but we have some room to run here, and as long as flow stays strong, industrials is a good place to be. Technology. Just wanted to highlight here, technology was our worst ranked sector, with 11 ranked 11 in the trading week and the tactical month. We saw a negative 0.65 outflow in technology. A little bit, in terms of the confusing nature of what this market is doing as we're going up without our leader in tech. But, the market isn't Market's always smarter than any one individual. So we're seeing here with technology is still trading in that tight trading box in terms of its relative performance versus SPY, and that's coming with some really sharp movements and flows. So we had really strong inflows going into late November, early December, stuck into favor for a minute, and then now we had some really strong outflows into technology. So technology is currently in a void, trending in the wrong direction in relative outperformance, but overall in this box, it appears that the market doesn't know what to do with technology. Financials looking strong. We were sitting in neutral and shot straight up to the top here. Really strong inflows into financials. We have some upward resistance here in the relative outperformance part of the chart, but overall seeing some strength, a nice little breakout. Financials is currently our top ranked sector and a good place to be. Last but not least, energy. So energy kind of made the move that we were looking for healthcare to do as well. We had a little bit of a stutter step here into neutral, but now straight up into favored, seeing a nice relative outperformance trend starting up in energy. Overall, looking strong. Ideally, we continue to get a little bit more, flows into energy, but trading week of ranking of 2, tactical month of 1. Definitely seeing some strength on this energy chart. Nice relative outperformance. And that is all I have this week. I look forward to breaking the SEAF model down with you all next week, and thank you.